Good morning, happy Friday, Focus. Friday the 21st of May. Goodness. And it appears to be winter outside. I'm so wet, I'm so cold. Heating doesn't seem to be working in my office very well. But hey, never mind. Moving offices in a couple of weeks. That's quite exciting. Got to do a bit of painting so that I've got the same colours again, but never mind, could be fine. So how are we all doing? How's our lives going now that we're sort of jumping out of this lockdown? Are we going out? Are we not going out? Are we a bit scared about going out? Where are we? Let me know. Give me some comments and love some love today. I've got a really tricky situation going on at the moment, and I'm not really going to go into it, but we have an issue with my mum, and it means that I'm doing what I can, and I probably shouldn't be doing this Friday Focus, and I know there's certain people who'll be very cross that I am doing it, but I wanted to do it today because I wanted to concentrate on something different. So we're going to talk today about how to maintain a healthy cash flow. 6 easy tips to do this. Cash flow. It is the lifeblood of every small business. You've got to you need to keep track of the cash that's coming in and the cash that's going out, because otherwise you won't have the slightest idea where you're going. Now, even if you're using a cloud accounting system and you're using, say, something like Xero, and you're looking at your profit and loss reports and all the rest of it, that's absolutely fantastic, but that's not going to tell you about the cash flow. And that is what is absolutely key. You have to keep the cash coming in, obviously, in order to ensure that you can continue serving your clients or selling your products, whatever it happens to be, paying your staff and your bills on time. Cash flow, however, can be precarious when you're running a small business, and late customer payments or unforeseen costs or anything like that can cause a huge disruption. And unless you plan these in advance, say for instance that you pay your professional indemnity insurance not on a monthly basis, you pay it on an annual basis. If you don't put that in your cash flow, that it comes out in April, whenever it happens to be, that's going to give you a big shock when it happens. If you have a big, any other big bills that come out, VAT, payroll, anything like that, if you are not forecasting those in your cash flow, then you could come a cropper, serious cropper. This is why all of my clients now pay on a monthly basis, so that it helps their cash flow and it helps my cash flow, and I know exactly how much is coming in or going out each month. Excuse me. Goodness. So we're going to go through 6 quick tips, and any comments, please pop them in the box. So number 1, get your invoices right. Your clients won't pay you on time if you send out the incorrect invoices. This then has obviously a negative impact on your cash flow. Ensure that all of the information that you need on those invoices is absolutely correct. And it sounds really basic, but actually it is so key, because if you haven't got the right name, you haven't got the right address, you haven't got the right description, you haven't got the right unit numbers, whatever. Hey, Victoria, my goodness, you made it. Hooray, how lovely to see you. So we're talking about cash flow today and how to maintain a cash flow, easy, healthy cash flow system. Number 1 is getting your invoices right. If you don't put all the correct information on your invoices, whether it's the name, the address, whatever it happens to be, especially the payment details, then you're not going to get paid on time. Your client is going to avoid paying it. Yeah. Good. You need some cash flow. Absolutely. We all need some cash flow. It's very, very important about the getting the invoices right. If you are, for instance, you're sending an invoice to a limited company, but you're sending it in the director's name or whatever, that invoice will not be correct for that limited company, and they won't be able to accept it. You need to make sure that you've got all of their correct details. So if this is a new client or something like that, you need to make sure that you've got all of their correct details, their correct address, the correct name, the correct description. Make sure if you're VAT registered, obviously your invoices have got to have certain things on them. In fact, even if you're not VAT registered, you've got to have certain things on them. So the things that you need to have on an invoice, if you're not using a cloud accounting system, which will obviously set it all up for you, is name of your company. address of your company, a date for your invoice. So it's usually called a tax date. Now, that is usually the date that you're sending the invoice out. It's not always, but it usually is. An invoice number. An invoice number has to be consecutive. If HMRC ever did an investigation on you and they looked at your invoices and they saw 1, 2, 3, 4, 5, 7, 9, 10, 12, 14, 16, they would say, where's 6? Where's 11? We don't like that. Has that been paid into your business account, or has it actually been paid voided, or has it actually been paid into your personal account? In which case, we will investigate your personal account as well as your business account. So make sure that it's clear for them. Make sure that there's a paper trail for them. Now, it doesn't actually have to be on paper these days. It is allowed to be a digital one, but make sure it is. So if you've got missing invoice number 6, put invoice number 6 in your system and then put right across it void. Then they'll know, they'll be happy. Okay, really important. Make sure that your payment details are on your invoice. So if they're paying by Bax, if they're paying by PayPal, whatever it happens to be, make it easy for them to pay. The easier you make it for them to pay, the quicker you'll get the money, the better your cash flow will be. Number 2, send your invoices on time. I have a client who, despite working with me for just over a year, still sends their invoices out at the end of the month on the condition that they have remembered. Now, at long last, I've got them onto Zero, and they now do it on their phone as soon as they've finished doing what they happen to be doing. This guy happens to be a plumber. As soon as he's finished doing the work, he sits in his van and he sends the invoice immediately. It's efficient. Not only that, is when, for him, particularly being a plumber, he's come out of that person's house, they have still got on their head, oh, thank goodness the loo's been fixed, or whatever it happens to be. Look at their email. Oh, look, there's an invoice. Oh, I'll pay it now. Done, dusted. Cash flow, more cash flow. Perfect. So sending your invoices on time is absolutely crucial. But it's also a very effective way of getting paid on time as well. You need to be able to keep on top of all of your payment deadlines as far as that's concerned. Review your payment model. How do people pay you? What are their choices? Can they pay by PayPal? Can they pay by Stripe? Can they pay by Bax? Can they pay by direct debit? Can they pay by credit card? Whatever it happens to be, review these regularly. My clients now, we have everything set up through GoCardless, so it's a direct debit. Invoice gets set up in Zero. Most of mine are repeating invoices, so they just go through on a monthly basis. It's done, it's dusted. You don't have to think about it. You have to chase them up occasionally, and occasionally you have to make sure that obviously the invoices are correct, etc. But it's crucial to review your payment method. Check what you're doing, and also, if you're using Stripe or PayPal or something like that, what rates are they paying? Are you paying them? How much is it actually costing you to use these payment systems? And is there a better one out there? Ask other people. Go into Facebook groups and ask other people, what do you do? How do you take money? PayPal take a fortune. Stripe, not so much. Sage Pay, they're getting quite expensive now. GoCardless, reasonably cheap, but they've made a bit of a muck up in the last couple of weeks with a lot of things. But have a look, because your fees, obviously, that you're paying for Stripe or PayPal or anything like that, they are a legitimate expense for your business, clearly. But the lower your fees, the higher your profit. And as we know, that's what I'm all about, is making your profit higher. Create a calendar. This is really important, actually. Cash flow is not just about money coming in. You also need to be aware of how much you're paying out. So if you create a calendar and you keep track of those bills and your taxes and everything else that you need to pay out, then you'll have a rough idea. No, you'll have a pretty good idea, actually, of what you've got to pay. So say you run a payroll. You've got 3 members of staff. They're paid on the last Friday of every month. Pop it in that calendar. There is going to be, roughly speaking, Victoria's just saying, is Stripe the best way? Let's just go back to the payments thing. Is Stripe the best way? I think at the moment, yes, Stripe is the best way. And also, you can link it with your Xero, your QBO, and things like that. And it's really, really easy to reconcile on the condition that you keep on top of it. Stripe is probably the cheapest way at the moment. There are, I believe, some new things coming out, but they're not out yet. Yeah, Stripe is the best at the moment, I would say. So creating the calendar. So you've got 3 members of staff. They're going to be paid on the last Friday of each month. Pop it in your calendar. Exactly, well, not exactly, but roughly speaking, how much they're going to be paid. Not only that, on the, say, the 10th of the following month, you're going to be paying out their pension payments out to Smart Pension or Nest Pension or Virgin Pension, whatever it is that you're using for your auto enrollment. Pop that in your calendar as well. On the 19th of that month, you'll also have to pay HMRC for the PAYE and the NI for those members of staff. Put that in your calendar. When's your VAT due? When does it come out? Do you pay it by direct debit? Probably do. In which case, when does it come out? All of your subscriptions. These are so key. They really, really are so key. What we now do is, with the majority of my clients, is we go through a cash flow forecast, month by month, not a problem. But we also now do a weekly cash flow. So we do 12 weeks in a row. And it shows them when their subscriptions are coming out, how much is being paid, etc., etc. Are they all coming out on the first of the month? In which case, contact your subscription company, whoever it happens to be, Adobe, Virgin, whatever it happens to be, and just say, can I change the date of my direct debit, please? Nobody cares. As long as you pay, nobody cares. But if you've got it in your weekly cash flow, it makes just such a huge difference. So when you're, the next one down is your creating your cash flow forecast. And quite often, very often actually, when you're expanding your business, your expenses are going to be higher than the money that's coming in. They're bound to be. They're absolutely bound to be. But when you're planning for growth, you need to have a forecast. You need to look forward. Now, some people say, well, yeah, okay, fine, but that's really difficult. I don't know how many courses I'm going to sell in the next quarter. No, you don't. That's why it's called a forecast. It is a guesstimate. But there are certain things in there that you can put in there. So the cost for your subscriptions, the cost for your phone, the cost for your insurance, the cost for your salaries, for your payroll, things like that. Those are absolutely, they're fixed and your variable costs. And once you've got those into your cash flow, then you can start looking at things. So you can say, okay, fine. Well, if I sell 6 courses in the next month, then I'm going to have this much income. Whoa. Have a look at the bottom of your sheet, your spreadsheet. If you want to do it on a spreadsheet, do it on a spreadsheet. It's completely up to you how you do it. But I would suggest that you use a cash flow spreadsheet. I have a very basic one, which I'm very happy to give you. If you pop in the comments that you'd like, just put cash flow, and then I will message you privately and then send it to you. What it has is at the very, very top, it's your opening balance of your bank account. Then it's got the income part. So you fill in the income part of what your income is. Usually what I suggest people to do is if we're not doing a weekly one, is that for the first 3 months, we do, like, where are we now? May. So we'd have February, March, and April as your actual figures in there. And then your forecast would be May, June, July, August, September, etc., etc. So you've got 3 months of your actual figures, and then you've got 9 months of your forecast figures. So you've got your opening balance in your bank account. You've got your income for those for that particular month. You've got all of your expenses listed down as what they are, and then you've got your net bank balance, which should be what your bank balance was on the 28th February, 31st March, whatever those dates happen to be. And then when you start to work on the actual, the forecast figures, what you do is in the expenses, you know how much those expenses are going to be. So you put those in first of all. Then you start to put in your forecast figures. They're the what if figures, and they're the exciting ones. So if I sell 6 courses in next month, then, oh gosh, look at the bottom balance. That's quite nice. If I sell 4, it's not quite so good. Gosh, that's break even. I'm only just going to be out of the black, out of the red. So I need to sell 6. It gives you a really good goal to work towards. So creating a cash flow forecast. Cash flow, please. Yes, absolutely. QuickBooks is supposed to do this for you, but honestly, I would do your own. I would honestly do your own because I personally don't think that QuickBooks one's pretty rubbish, but that's only my opinion. Xero's is slightly better, but honestly, if you can do it yourself on a spreadsheet, I know it's manual, I know it takes more time, but again, it gets you to really understand what your numbers are, and I think it's really, really important to be able to do that. Number 6 is preparing a safety net. It's never a bad idea to create a safety net, rainy day fund, whatever you happen to be calling it. And then you can always ensure that your business has got some sort of cash reserve so that any unforeseen costs, etc., can be covered, and you will hopefully know ahead anyhow. What I would also suggest is that, obviously, being a excellent, Victoria. Shara's got me working on my money and empowered. I love a spreadsheet. I'm so pleased, Victoria. I'm so pleased. I love a spreadsheet too. Profit first, because then you're automatically starting to put a percentage of a predetermined percentage of your income straight into that account. Half of that profit account is your rainy day fund. So if things do go a bit tits up, basically, and you haven't foreseen some massive cost, or say something's happened and you suddenly got to buy a new computer and you haven't actually put the money aside for it, you're going to be stuffed. You are going to be stuffed. If you've got that rainy day fund already set up, if you've got your profit first, you're putting your percentages into there, that money is sitting in there ready to go. I said I wasn't going to talk forever, and I'm really, really sorry. The reason it's called a cash flow forecast is because money isn't stagnant. Money moves. Money always moves. If you have a stagnant cash flow, then it will not only cause you to lose money, but it will also cause you to miss out on growth and investment opportunities. None of us want to miss out on opportunities. Opportunities are what we live for. Well, I do. If your cash flow is negative for too long, your business will not be able to operate. It's really important that you employ these common sense strategies, but sometimes common sense has to be reminded to us, and sometimes it just has to be said. So, Victoria, I will get that to you. I'm sure I've got your email. If not, I'll message you on Facebook, and I will get that to you. Anybody who's watching this on replay who'd like a copy of the cash flow, it's a very, very basic cash flow forecast, but it will help you understand what you are spending your money on. And once you start to do that, then you can start to really understand the numbers, start to work out what your gross profit is, what your net profit is, how much it's improved in the last year or how much it's gone down in the last year. And you can start working out what we call the KPIs, key performance indicators. When you have the key performance indicators, you start to understand your business, and then you start to grow. Thank you all very much, and I hope you've had I hope this has been really useful for you. I hope you have a great weekend. I hope to God it stops raining. And I will hopefully see you all next week. Bye.